We got Powell saying everything in the book, trying to talk politics with everyone in the House and the Senate. And then we have the Republicans. As of last night, yes, and this is not clickbait. This is actually real. The Republicans are preparing to default on the market. Now, the question is, where are we going? Do we have a balance in our midst? When does the next drop pursue? And what do you do until then to make your money? Now, in my opinion, I'm going to tell you right now, I'm not going to waste time. We're going to jump right into it. Now, when we look at something like the 2 hour, giving you a visual, we basically had a little bit more drop here on the day. We found a little bit of a bottom. We made a new local low, and then you bounced. Now, in my opinion, and I'm going to tell you why dated in the video, but I'm going to let you get out of here if you want to real quick. I believe personally, you have a little bit of upside into next week. Now, overall, I'm still very bearish. I still think downside is going to be coming quick and aggressively, but I'm going to tell you right now, I have to side with just either sitting on my hands, which is a lot of what I'm doing, but I'm not overly aggressive to the downside just yet. We're going to explain a little bit more into that. I also will have this down below if you want to check this out to read into how the Republicans are doing this and why. But yeah, it's pretty terrible for the economy. We have a lot to go over here. But before we do that, I have to ask you to consider doing two things: liking and subscribing every single day. As you can see, I post videos for you so you are prepared on the market, unbiased as usual. I'll tell you if I won or lost. And then also, two insiders, you have educational videos. Now, I do want to say right now, giving you a little bit of a visual, a little bit of what has been happening here on the channel. Now, before I left for the weekend, right, we had a little bit of a loss here on NVIDIA. I posted a loss, 1,200 roughly. Then what did we have? We had the Tesla play. Tesla, so far today, I ended up cutting around 80% of my position, around $20 a contract. To be more precise, 19.8 right here. The position did really well. Average entry was about 14.3. We sold at around 19.9. Great day. Can't complain there. Do the math for yourself. That was the play there. But why do I go over wins and losses? It's to demonstrate risk to reward. Now, I will say right now, if you're interested, Discord link is down below. We have 20 spots available for the $30 cheap tier. So just understand that those are going to be it for the next probably month and a half. We might release more, but just understand that the link is down below. Let's get into it. So when we look at what's happening here on NQ, I'm going to tell you right now. Now, there's a few things that concern me here. If we look at NQ and look at ES, the two primary indexes, the S&P 500 and the Nasdaq, right? Now, when we look here, what happened? ES broke below its demand. It invalidated it, but it did find buyers from that level, okay? And giving you a little bit of a visual here, when we look at Bookmap, their link is down below if you want to check them out. Giving you a visual of this order book, I think a lot of my feelings have been confirmed today. Now, what happened? We had a push down. Obviously, buyers showed up down here and they sat there, as you can see here on the book. And then what happened here? Buyers stayed there. They came back. They did not let you make a new local low, and then you bounced, right? This is what you want to see if you're bullish, if you want to see a bounce, right? And then proceeding on to the end of the day here, the last few minutes, icebergs to the upside, some hidden order book, dark pull to the upside. This also leads into my thesis of expecting some more upside into the end of this week, possibly beginning of next week. Now, when we dive back into the charts, so what I will say, and really quick, I do want to go over some of the biggest orders on the book today for options. If you're interested in that, now I always sort by the largest premium, and you saw a lot of these orders come in around the last 2 hours of trading, heavily favoring the downside. A lot of these came into Tesla and Amazon. Those are the two biggest ones that I was watching. Also EEM, which is the emerging markets ETF, which I might add is a pretty big risk off mentality, right? Because you're betting against the emerging markets. I'm just going to say that right now. But that's where I'm looking at. So again, even though as we go back to the charts, we can see the chain and we're looking at what's happening here. The chain may be bearish, but you're still bouncing near that support, right? You invalidate it, you still look bad, but you do have the 200 SMA down here. The NQ has been holding up way better in comparison than the ES as well. So in our experience, when we go back in time, we look at last week or the week before that, when you were bouncing at the 200 SMA, ES and the Nasdaq were moving together. As of right now, though, in my opinion, I think the Nasdaq has showed more resolve and more strength in comparison. What does that mean for me? I believe Nasdaq has been one of the leading factors on this move, and it's interesting to point out that the Nasdaq is holding up this much better in comparison to the Dow and the ES. Now, with what Powell said and everything, I mean, it was really just a repeat of yesterday about the default, what was happening with unemployment, his big concerns, everything in between there, right? So essentially what Powell said, and he left everyone on a cliffhanger, was they're going to be making some big decisions. They've been looking at data. We've looked at the unemployment numbers. JOLT job openings came out once again, dropping month over month, right? Still beat forecast, but worth mentioning. And then we also going to the ADP job information we have this morning, which also was not very good, right? ADP non-farm employment change went down, right? So these are things to be, or went up, sorry, which shows more jobs were created, which is, showing unemployment to go down further. Okay. No, that's not good for Powell. Powell has been saying unemployment is going to have to rise. That's the plan. It's still on that trajectory, but the jobs are not pointing in that direction, which what has Powell said, that this still shows sign of weakness in the market for the longer term, right? Signs of more downside to come. Why? Because as long as the market shows strength in the short term, inflation won't really reduce. Okay. Right? That's what Powell's been saying. That's what we've been talking about extensively here. We don't want to get it mixed up. We want to keep the same thesis, right? And I just don't want to confuse anyone that I'm saying that I could see the potential chance for some upside here. Okay, I don't want to confuse you. I don't want to cause anyone to be like, well, Tyler, are you flipping your narrative? No, I'm not flipping my narrative. I still believe you are bearish. I'm going to say that right now. I don't think you're really going to get above 12.4, but that'd be my upside resistance in my opinion. Okay. Now your downside, your demand, it's still down here locally 12,000 in your 200 SMA. Okay. I'm going to continue to say this, right? I just don't see you dumping before CPI or PPI next week. Those are going to really set the tone, because in my opinion, if CPI comes out hot once again, or a larger or a beat on CPI and PPI, I think you have to see the Fed, most likely they're going to do the 0.25, but you're going to hear a really bad tone from them. And I think that that's going to be the most important in the short term. There is a possibility they do a 50-point hike. And I think right now the percent chance is a 68% chance they do a 50-point, but I think it's still too high. Data hasn't been released. We don't know if it's a blip. We don't know if inflation is actually continuing. But if we get 2 months of back-to-back upward CPI and PPI once again, it's going to be a very big concern for the market, especially because what Powell said today. He said that right now, energy is actually a negative on inflation. So energy is so down recently that it's affecting the CPI and PPI readings towards the downside. So it's the most bullish thing out there right now. But if we go back into summer with China's demand rising on energy and what they're doing with their economy, we could see some pain. We also saw Powell talk about globalization, and he said that that will have a very negative effect if it starts to play out in the market, showing signs of growth around the economy worldwide, which is something we don't need to see, which is already, we're seeing signs of that with Japan and China, okay? So still, so you understand, supply level, 1235, demand level around 12,000, 12,050 on NQ. ES, you've invalidated your demand. I think your next support has to be down here, your 200 SMA around 39.50. I would not be surprised if that was tested. But again, I don't see us crashing. I don't see us dumping until PPI, until CPI. And again, I'm very bearish on the market. I'm probably a little bit biased to the downside. But I have to look at what's happening with the market. And I have to be honest with you. I don't see the dump happening before those data pools get released, at least one of them. Okay. Now, when we go into a few more things, now I've been tracking the yields a lot here. Now, really quick, I love to cover the 10 and 30-year yield inversion. Why? It's been, in my opinion, the best tracker of downside on the market. Now, personally, I think CPI and PPI won't be great. I don't think they're going to be good. I think there's a high possibility they beat based on what's happening with unemployment and wage growth. I just don't think that they can play out personally. Now, if we look at the 10-year and 30-year, they're pointing to downside on the market, in my opinion. If we look at what happened back here in September, it pointed to a really big shift and a drop and massive decline, okay? You are as high as you've been inverted on the 10 and 30 going back to September. Before that, even in 08 and 06, when the yields inverted back here during the housing bubble, they did not reach this level. The only time we were back this high was back during the dot-com crash, which we know how that ended. So I would be watching this and looking at this. You also have the ascending triangle forming here. Pretty crazy to look at as a whole. So that's bearish in itself. A little bit further, the 10-year yield, it's back almost at 4%, trying to hold back above that range. I don't like to cover the 2 and 5 that much, but the 2-year yield has officially mounted above 5%. Which, giving you a visual, and this is kind of crazy to think about, your 2-year yield has not been this high since 2007, which again was the housing market crash. Now we've had inversions, but giving you a visual of these short-term bonds and yields, again, haven't been this high since all the way back since we had the big bang during the 08 housing bubble. Now, again, am I saying there's a housing bubble right now? No, but I think there's a very big problem with what's happening with our economy. I think some of the underlying factors are showing early signs that inflation may in fact become entrenched, which will shift the paradigm of the entire market. So again, as we look at these, the big warning signs are still flashing red, and they're still very dangerous. The 5-year yield is not, it's getting there to 5.13%. Still has about a whole percent to go though till you get there on, back to the 06, 08 levels. But it's worth mentioning the 2-year is absolutely on a tangent, going ballistic, going berserk, absolutely disgusting, kind of just ridiculous there as a whole. Going into VIX, I know you're going to ask, VIX is still down in that massive support zone as we've been talking about, right? Anytime it comes down to locally $18 to $17, it's been a buy over the past almost 2-3 years. Now, you're sitting there, you're relaxed. I think you probably cool here until you get PPI and CPI. If you're looking to go short, I think CPI, I'm going to say it again and again so you understand and you can't say that I didn't say it. If you're looking to go short, PPI and CPI are the time to do it. Until then, I think you're taking massive risk, and I don't see the sell side volume kicking in until then, okay? So that's what we're looking at there. Again, these are kind of like all the big signs that I'm watching here on the market. Now, giving you a little bit more of a viewpoint, I want to go to Yahoo Finance real quick, and some of you love this, some of you hate it, talking about volume. This is the easiest way to track your volume, okay? Just go to Yahoo Finance, type in whatever ticker, and go, look, I always have SPY. It's literally bookmarked for me, right? So when we look at SPY, when we look at what's happened, I didn't mention it yesterday. I was kind of in a rush. I just got back in town. But if we look at what happened on SPY yesterday, one of your highest, and it was your highest volume day that you've had all the way, I believe, since the beginning of December, right? Since December 16th. That was your best volume day. It surpassed your previous best, which was February 24th. And that was again in favor to the downside, right? Now, today, we saw a lot of the same comments. There was nothing really shocking the market. And I said it on Twitter. If you don't follow me on Twitter, I recommend you do so. I don't know what else to say about this. But if you look here on Twitter, post this for you guys to see. Go to comments, replies, whatever it may be. Someone asked me specifically about this. And so someone said, do you think we're going to have a small bounce coming up? I said, yep, side into tomorrow and data, in my opinion. And then I proceeded to post this. Buyers have to step in. These 4-hour candles in QNES look so bad. I don't want to play the downside until next week. And then as well followed up with right here that he was confused with the downside and made no sense. But that's what you're seeing right now. I just don't expect sellers to take control until we have that data. Because once the data gets dropped, then you're going to understand what's going to happen at the next meeting. Just like we played the last meeting to the upside, the data will tell us what is going to happen at that meeting. It will tell us the tone. It will tell us what Powell's going to say, how he's going to react, just like it told us what he was going to say before he spoke in front of Congress, right? That's how we know what's going to happen. It's very easy. We just kind of can come in, listen to what happens, listen what happens with data, and then we know how to react with the market. I'm going to tell you something right now, though. A lot of my plays have all been swings, specifically to the short side. They've all played out the best because I'm just kind of chilling and relaxing on those positions. Scalping right now has been really tough. I'm going to not lie to you. I don't like scalping. I haven't really scalped anything in the past 2-3 weeks. It's all been swings if I'm trading anything. That's why Tesla was so good. Now, people were like, well, you were wrong on NVIDIA. Yeah, NVIDIA, it's honestly been the strongest stock in the market. You have this giant ascending wedge. But what's one thing that we can take from NVIDIA? And it's why I show wins and losses, right? And I try to focus the most on the losses. If you look and compare the loss on NVIDIA in comparison on the win on Tesla, is nothing. A $1,200 loss versus a $9,000 gain. Think about the risk to reward. I'm risking almost $1.20 for every $9 I'm looking to make on my win side of the trade. That just shows you the winning strategy there, and focusing on these names and having position size to where you can let them run occasionally. That's my goal here in this market, and I just try to help you guys and give you at least some plays or point you guys in the right direction. It's never financial advice. It's always on you guys. So that's why I never say, oh, look, say congratulations to Tyler. Tyler made you money. No, at the end of the day, it comes down to you and making sure you do your DD, you doing your due diligence, you doing the research, you finding those entries for yourself. Unless you're in Discord, then I post exactly what I'm doing. But then again, still, you have to click that buy button. You have to make that next step, because ultimately you're in charge of your finances and your risk to reward, right? I always want to make sure everyone here understands that, and you're never just assuming this is a get rich quick scheme and we're all going to make money and we're all going to be happy all the time and you're never going to lose. You have to understand both sides of the trade, both sides of the market. Okay, so you need to understand that. Now, few trades I'm liking right now. I like to always give you some trades going into the end of the video. Right now, again, so beginning of the day, I actually like to scalp on Microsoft. You were holding below the 200 SMA and kind of holding this downtrend. Now you started breaking at the end of the day. If we look at what's happening here, I like it. So this is a 200 SMA, this line right here. As long as you remain above 252.5, I like the upside here. I'm not going to give any specific targets, but I like the scalps to the upside. You got a good break, retest. You're trying to hold now. I like Microsoft to the upside. It looks good. Again, as long as you're above 252.5, I think your risk to reward's pretty tight here as well, because if you hold below that, then you just get out of it, right? You just take the loss. Now, going a little bit further, a lot of people talking about AMD and NVIDIA. I'm not going to talk about them. I'm not interested whatsoever. Tesla, again, I've closed a lot of my position here, but again, Tesla still looks really good. Okay, I'm not going to enter anymore. There's no reason unless we bounce, and then I'll look to just re-enter. But as of right now in Tesla, unless you come back up to like 187 and reject, there's no entry opportunity to get more here. I still like the downside towards 170, 171. But again, you have to break 180 to do that. And again, like I said, I don't see indexes breaking down just yet. So I'm kind of in a sticky situation there. I'm not looking to just YOLO into anything else. Now, next up is going to be Walmart. A little bit of an interesting play here. Now, Walmart is above its 200 SMA, as you can see. You've been above it all the way since October 24th. If you can get a test of the 200 SMA around 136.5, I like it to the upside. I think it's a really low risk play. That's how I would play it. Once you hold below 200 SMA, like on an hourly or 2 hourly chart, then I would get out of it. I want to have some time on this position as well. But again, it's something that you could look at to possibly trade into the beginning of next week. I like Walmart right there. Personally, these are just a few trades that I'm liking. Again, I don't want to mention too many things. I want to only mention stuff that I really, really like here. And right now, those are the best setups in the short term for the upside. The downside plays, again, I like Tesla if it hits 187. I'm looking to get in NVIDIA if I get any type of opportunity or breakdown, but I'm not going to just YOLO short it at the top. I got to see signs of weakness. Until then, I'm just a spectator, right? AMD, NVIDIA, I definitely think opportunity screaming our way, but we're not going to YOLO or FOMO into any position. That is not how you make money. You got to be patient, people. Patience is what makes us money here. We are reactive traders. We wait for it to break down, then get our retest, and that's where we enter. I'll see you guys tomorrow. If you have questions, leave them down below. Have a good one.